Good evening. The time is 7 o'clock, and we're ready to call the April 12th regular session number 48 of the Raytown Board of Aldermen to meeting. We will start with the opening session, and then it will be led off tonight by our good friend, Jay Grimwood. Jay is with the Kansas City Baptist Temple, and always a pleasure to have Jay with us.
Let's stand and pray. Lord, we come before you, Father. We're thankful that you're a God of mercy and grace. Lord, that in the midst of a world that's torn by war and by the famine and the economic downturns and all of the trouble that we hear about, Lord, that you're stable. You spoke the worlds into existence with a single word. And Lord, you're mindful of our thoughts and the intents of our heart. And Lord, you search mankind and you try him. And Lord, as we're here today, help us to be mindful of that, Lord. Help us to govern this great community with lordship and with understanding. And as we come to this group of men and women here that are given to that task, that we would respect them, humble ourselves before them, and thank you, Lord, and be thankful for the freedom that you give us, for freedom of religion and freedom of speech, freedom of assembly. Lord, without that, we wouldn't even be here. Lord, we just love you and praise you. Be with us now tonight. We pray all these things in the name of our Lord and Savior. Amen. Let's pledge allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all.
Thank you. Ask the clerk to call the roll, please.
Alderman Kramer?
Here.
Alderman Pardue?
Here.
Alderman Azier?
Here.
Alderman Hamilton?
Here.
Alderman White?
Here.
Alderman Nelson?
Here.
Alderman Ertz?
Here.
Alderman Van Buskert?
Here.
Alderman Mock?
Here.
Alderman Lightfoot?
Here.
We have a quorum. Next up, under proclamations and presentations, it is a great deal of pleasure that I ask Chief Lynch to come forward for the swearing in of Police Officer Michael Reagan. I had the opportunity to meet with the Reagan family just ahead of this meeting, and I will tell you, it's you could tell in their own eyes that the pride that they have in this young man. And I'm going to say in advance that we have a great police force, Michael. And I'm proud to welcome you on behalf of this council as the chief prepares his speech.
Thank you, Mayor, Board of Aldermen. As we do introducing new employees formally to you, just a little background on Mike Reagan. He's 25 years old. He is from Freeman, Missouri. So after graduating from high school, he went to Avila University. Mike's married, and his wife Crystal's here there in the blue. Mike graduated from the Missouri Sheriff's Association Academy December 12th, 2010. When we hired him March 14th. Prior to Mike being hired here, he was a loss prevention officer. In his spare time, he enjoys hunting, fishing, and spending time with his family. I'm just going to kind of repeat the oath, and then I'll let Teresa do the formal swearing in. To all who see these presents, greeting. Know ye that reposing special trust and confidence in the valor, fidelity, and abilities of Michael Reagan, I, James B. Lynch, Chief of Police, do appoint him an officer of the Raytown Police Department this the 12th day of April, 2011, and commission him to exercise the powers of this office. This commission is to continue in force during the pleasure of the Chief of Police and under the provisions of law.
If his family wants to get up and take photos a little closer, feel free to. Miss Reagan, if you want to get up and take those photos, come on up. Hang on a second, Teresa. Let them get up here and get their pictures. Grandma Reagan, you want to get a little closer? Come on up. There you go. Chief, you ought to be in there.
I, Michael Reagan, do solemnly swear that I possess all the qualifications for the office of police officer as prescribed by law. That I will support the Constitution of the United States and of the state of Missouri, provisions of all laws of the state, affecting cities of this class, and the ordinances of the city of Raytown, Missouri, faithfully to me, myself, to office.
Chief, would you be okay with Wade taking a picture of the whole family and you and Michael up there, please? Come on, family, come on up. Come on, Grandma, Grandpa. Make sure you can be seen on the camera. Thanks.
Thank you. Just one thing to add. Brought presentation to you last month about hiring, and just to kind of update you, we believe we're going to hire a young lady from the academy, and that'll only leave one opening. So if we get that accomplished, and we have somebody starting Kansas City Academy on the 20th, so we'll be good to go.
Thanks for staying on top of it. Officer Reagan, thank you again on behalf of the board and citizens of Raytown for choosing Raytown to serve. It's very much appreciated, and you'll join with the pride that we have in the rest of the police force as well, sir. Thank you. Okay, next up are public comments. I've got two separate lists here. The first one on the list I've got is Tom Gibbons. Tom, it's always good to see you, sir. Surprised you're not out playing golf still.
I wish I was on the golf course right now, but I'm here this evening to address the board and want to thank you on behalf of the chamber. And I'm co-chair of the Summerfest event this year again. Pam Clark McKinley is also co-chair, and Vicki Turnbow is here as support. But we really appreciate all the support and cooperation and help that the city has given us over the last several years with this event. And, we'll try to keep the rain away this year, but at least you don't have to worry about a drought in the Raytown area when we have Summerfest. But, it's going to be pretty much the same layout we had last year. We don't anticipate any changes, probably between 60, 65 teams of barbecuers and about 75 to 85 vendors. So, it's an 8,000 to 10,000 person event over the 2 days. So, just want to thank you for your support on that.
Tom, tell us again the dates, please.
I'm sorry?
Tell us again the dates of that so the public knows ahead of time.
And at tonight?
Yeah.
Okay.
Have you got them? The dates of the Summerfest event?
The dates of Summerfest are the 10th and 11th.
Okay.
Of June, yes.
June 10th and 11th.
Uh-huh.
Very good. All right, thanks, Tom.
Thank you.
Next, we've got Woody Whitman. Good evening, Woody.
Good evening, Mr. Mayor, our Board of Aldermen, and the citizens of Raytown. I just want to make a special trip up here to say how very pleased I am that our mayor has been reelected and all incumbents for aldermen are reelected. I think the citizens of Raytown have great confidence in you, as I do too, and I wish you the very best. I have one thing I want to point out. I know that you will be preparing the budget for the year 2012. I guess it's later on in the year. I don't want you to forget about our lighting situation. There are a number of areas of Raytown that are still without street lights. And as Our police chief, Jim, told us here at the last meeting, Mr. Lynch told us that, crime has increased, and that's due to the economy. Has a lot to do with it. People can't make money, they go out and take. And I think if we had street lights in those areas of Raytown that don't currently have street lights, as Mr. Azier did get street light approval, managed to get 4 street lights in the city before those funds were frozen. I would like for you to make a real effort to put that back on the table this year. Thank you.
Thank you so much, Woody. Okay, those are the 2 names we've had sign up. Would anyone else in the audience like to address the board at this time? Andy, good to see you.
Good to see you too. Good evening, Mr. Mayor, Board of Alder people. I'd like to expound a little on what Woody said. Street lights are seriously lacking in Raytown, all of Raytown. In fact, where I live, the street light's on a corner. It's basically blocked by a tree. The next street light is a half block past the next corner. So essentially, in my mind, the next street light's 2 blocks away. That's too much of a distance. Kansas City put the street lights about every 50 feet, which to me is just too close to waste of money. But I think there should be at least 1 street light every 300 feet or so, or 360 feet, which is about a block. Because it's really hazardous. I showed my house back in 2004 to a prospective buyer, and the first comment they made was, "There's no street lights here. This is a dangerous area." I'd like to see the street lights addressed. Thank you.
Thanks, Andy. Would anyone else at this time like to address the board? Once, twice, moving on. There's, under the category of communication from the mayor, there's a lot of things I would like to say that are on my mind tonight. They pertain to, I think, the direction many of us would like to see the city go. I'm going to refrain from elaborating on that until the next meeting, at which time we're going to, the newly electeds will be sworn into office, and I'm going to reserve comments on that until that next meeting. But I would like to point out a couple things coming up. That there are still a lot of very big events happening within the city. Raytown Community Cleanup Day happening April 30th on Saturday. Maybe there'll be one in September. April 30th on Saturday is a big day for the community. I understand also the school district's having one at the same time. We are all part of one community, so I think it's great that that both of the entities are getting together on this. It's a big event for us. We're going to have a lot of volunteers out. We have a lot of civic groups who are stepping up to help, and we look forward to adding more and more to that list as well. Church groups, civic groups, school groups as well. This is all about a time when we can get out this spring and get our community ready for more flowers to peak up and to keep our grass green and the houses and properties improved. We do expect that the next couple of years we're going to devote a lot of time and energy to getting back into our neighborhoods, and we'll look for these community cleanup days to continue to happen and to further enhance our neighborhoods and improve the situation even greater. As Mr. Gibbons pointed also, we've got June 10th and 11th, the Summerfest. It's always a big event as well, mainly sponsored by the Chamber on that. It's a huge event for the city, and we look forward to that happening as well. I'm going to yield further comments to the city administrator at this time, and I'm going to come back and hit some of these others on committee reports. Mahesh?
Good evening, Mayor Bauer and Board of Aldermen. Not much significant to report other than the next Board of Aldermen meeting would be on April 9th, which is next Tuesday. The one item that will be brought upon for your decision would be on the healthcare insurance. Obviously, healthcare insurance has been rising almost to a double digit every year. The last couple of years, city has been able to absorb 100% of the cost. That would not be the case or recommendation from the staff here. So you will be presented with few scenarios, and hopefully we'll get a direction from you. I will also yield my time as we are having a audit discussion for 2009 and 2010. Please feel free to ask any question if you have after the presentation. Thank you.
Very good. Moving on to committee reports, I'm going to start with Mr. Mock.
Okay. Council on the Aging will be meeting on the 21st, on Thursday the 21st. Okay, and Mr. Mayor, Raytown Council on the Aging will be celebrating Older Adult Month, May 2011. Notice I'm looking at you too. With their Senior Expo. That will be May 6th, 2011, 9 o'clock to 12 o'clock in the chambers here. Okay? There'll be information. Well, there'll be vendors with information, refreshments, promotional items, door prizes. It's free to the public. Okay, then another announcement. There'll be a second annual egg extravaganza this year. It'll be Saturday, April 23rd, 10 o'clock to 3 o'clock at the Green Space between 62nd and 63rd Street. There'll be an old car and truck show, photos with the bunny at the FOP, and that will be at 63rd and Blue Ridge Boulevard for a small fee. 12:50, and that's both at 10 o'clock, I'm sorry. 12:15 will be story time at Raytown Mid-Continent Library, and then they will parade across the street at 1 o'clock for the Easter egg hunt for the kids. And if you weren't there last year, it was a pretty big ordeal. There's probably at least, I know Pam's here, about 600? Oh, at least 600 children and adults there last year. So I hope everybody can make it. Okay. One other thing is Minor Smith Park is closed till June due to the bridge being out. They're redoing the bridge down there as we speak. The footings went in as of yesterday. They should be putting up walls for the bridge today. Should be completed sometime in June. And I think that is all. Thank you.
Very good. Thank you, Steve. Michael, anything to report as co-chairman of the Legislative Committee?
I don't have anything new to report.
Okay. Ms. White, as chairman of the Municipal.
Municipal met this evening prior to the council meeting, and our next meeting will be May 10th at 7 o'clock, the usual time.
Ms. Melson, chairman of Finance.
Finance Committee will meet April 26th, which is Tuesday, 6 p.m. in council chambers, and details to follow.
Mr. Azar, anything to add on legislative?
Actually, I did have a question for Mahesh regarding the billboard bill that's taking place in Jefferson City. Is it okay to ask him that question? To clarify it?
Sure.
Mahesh, you know, the legislature is discussing a billboard law, and I couldn't really tell if that was going to affect this city or not. We do have a state highway going through Raytown, so I can see that potentially as a problem. How do you see that?
I think you're referring it to a omnibus bill, Senate Bill 839, I believe.
Right.
That has a lot of provisions in there, and that could potentially affect the local municipalities. Each and every year, folks in Jefferson City tries to do the thing that impact the local government. What they are tired of, unfunded mandate from the federal government, they turn around and push that to the local government. And that bill includes not only billboard, a lot of other provisions, and who knows where it will go, but Missouri Municipal League, which we are part of, as lobbying effort, they are opposing that bill. And at that time, I just don't know where their effort will result into something. You're right, it may impact Raytown as the state highway goes through the heart of this town, but equally it's going to impact every other town that has a state highway. So until that legislation is moving forward in the direction that we really need to concern, I think the MML that represent 200 plus cities are making an effort at Jeff City to contacting the legislatures and opposing that bill. So, you know, we don't know where it will go, but when and if that has an impact and how much that would be is unknown at this time.
One of those provisions in the bill states that if the city has stiffer controls over billboards than what the state is, we're responsible. Do you know our the controls that we have as a city is different than what the state regulations are?
Without, getting intense into the research, I can't answer that question.
Okay, well, that would be the key thing we probably need to look at in the future, because that's the one thing that would make a big difference. If indeed we are not as strict as the state is, we have nothing to worry about. If we do, we could have a serious problem. So, thank you.
Okay.
Mr. Pardue, HRC.
Yes, the Human Relations Committee will be meeting on April 21st here at City Hall at 6 p.m.
Any other committee reports? Very good. Next up, we've got the study session, the 2009-2010 audit discussion. Jeremy Wilmoth has already got the slides teed up, and as our finance director, Mr. Wilmoth, the floor is yours, sir.
Thank you very much. With me tonight is David Cochran and Michael Keenan from the firm Cochran, Head & Vick. They're going to give a presentation on their reports from the audit that just concluded, and once they're finished with their comments and you're finished with your questions, I'll give a brief financial year-end report as well.
Okay.
Good evening.
Good evening, sir.
I'm David Cochran, managing partner of Cochran, Head, Vick & Company, CPA firm, and to my right is Mr. Michael Keenan, senior manager on this engagement. First, I'd like to get this mic still, and then secondly, I'd like to thank the mayor and the Board of Aldermen governing body for appointing us as your auditors for the city of Raytown for the year ended October 31, 2010. We're very pleased to be here this evening. We're very proud to see our name associated with the city of Raytown, Missouri. I think all of you have been provided a hand copy, a manual copy of what's reflected on the wall, my back. It might be good to refer to it if you have problems seeing what's on the wall. And I believe you've all been provided with three books. One, a comprehensive annual financial report, which is a rather large document. The single audit of federal financial assistance expenditures for last year. And a required communications, which includes, among other things, management points that we will get into as we go along through our PowerPoint presentation. First, I will address a little bit about ourselves. Been in business since 1975. We're a member of the American Institute of CPAs, the American Institute Employee Benefit Plan Audit Committee, Governmental Audit Committee. We're a member of what's called the BDO Seidman Alliance, an affiliation of 155 CPA firms throughout the world. We're licensed to practice in Missouri and Kansas. We have approximately 40 governmental clients that we serve. Next page shows the members of our team that worked at some point on your engagement. And two of them stand up here before you. The rest of them, I couldn't bring them all this evening, but we were engaged to perform an audit of the city's basic financial statements and the city's compliance over federal expenditures. And a single audit and a financial and compliance audit addresses three basic questions. Are the financial statements free of material misstatement? Are internal controls over financial reporting and compliance adequately designed and operating effectively? And did the city of Raytown, Missouri comply in all material respects with finance-related laws and regulations? Our responsibility is to conduct our audit according to generally accepted auditing standards of the United States of America and the Office of Management and Budget Circular A-133 that relates to the single audits of federal expenditures. We're supposed to plan and perform our audit to obtain reasonable but not absolute assurance that your financial statements are free of material misstatement and report on internal controls over financial reporting and compliance with laws and regulations. The Auditing Standards Board of the American Institute recommends we communicate certain matters to the governing board. Illegal acts, none came to our attention. Changes in significant accounting policies the city implemented, GASB number 51, which has to do with reporting of intangible assets. And the next two GASBs, number 53 and number 58, had no impact at all on the city's financial statements. We had no difficulties or disagreements with management. At this point, I'd like to thank management for the excellent cooperation we had during the conduct of our audit. The city administrator and his staff, director of finance and their staff, his staff, we appreciate very much working with professional people. And we had, this is our second year, I believe, with Raytown, and we noticed a great deal of improvement, and we enjoyed very much working out here this year. We had full cooperation, full access to the books and records. Summary of our reports and answers to our basic questions. Report on the city's financial statements, in our opinion, are presented fairly in all material respects, and that's commonly referred to as a clean opinion. Report on control over financial reporting. We identified certain significant deficiencies related to financial internal controls that we consider to be material weaknesses. Those to do with financial reporting, which revenue and receivable reconciliations, review, reconciliation of certain interfund activities, and certain other adjustments we were required to make to the financial statements. Report on compliance applicable to the city's major federal programs. And we believe they comply in all material respects with the laws and regulations. Management's letter of comments contains suggestions for best practices and possible improvements, internal controls, noted in conduct of the audit. These are not weaknesses. These are simple items that we wish to bring to your attention that might help the city in its conduct of its financial affairs. Current year comments relate, again, to finance reporting, comprehensive accounting manual, outstanding check policies, future accounting pronouncements, and fund balance reporting. All of these are enumerated within the required communications and also management's responses to all the items we brought up, discussed. Lastly, Cochran Head Vic, appreciate very much the opportunity to serve the city of Raytown, Missouri. If there's any questions, we will now try to respond to those.
Any questions of the gentleman at this time?
Very well, thank you very much for having us here this evening.
Thank you, sir. Jeremy, you wanted to add some further comments?
Sure. Before I do, let me just also add from the city's perspective that we've really appreciated the engagement with Cochran Head and Vic. They've really helped us to solidify our processes and have given great examples of other best practices that other governments around our area are doing that my staff and I are working to implement even as we speak now. So again, I thank you for your service with the city, and it's been a pleasure. Thank you. Thank you. My comments tonight are essentially a boiled down version of the management discussion and analysis that you'll find in your audit. What we try to do is take just a little different approach than what's required under the GASB to try and boil it down to a little plainer English to help people hopefully understand the financial condition of the city. This first slide is the overall change in net assets. This compares revenue and expenses with changes in fund balance by what's called activities. The GASB, the Government Accounting Standards Board, considers all governmental activities anything that is not a business type activity. The only business type activity that we have is the sewer fund. Other cities may have a golf course, or they may have a water department or some other type of activity that outside of the government realm would be considered a business. So GASB has split those two. So our governmental activities are essentially the general fund, the park fund, the transportation sales tax, the capital sales tax, the public safety sales tax, our risk management fund, our TIF fund, and our capital improvement project fund. And then the business type activity fund is just the sewer fund. As you can see in our governmental activities, our revenues were $20 million, just about $20.4 million, and our expenses were $24.3 million. After the transfer in, there was a reduction of net assets of just about $3.7 million. And we'll go in to explain this in a little bit more detail in a few slides. On the business side, it was $5.4 million of revenue and $4.8 million of expenses, and after transfers, an increase to net assets of $402,000. And I might just add, if you have any questions as we go along, please feel free to stop me, or you can hold your questions to the end, whichever you prefer. This next slide is essentially taking our three biggest revenue types and comparing them for the last 5 fiscal years. The orange category is our property sales tax. You can see in each of the 5 years it is essentially flat. It has not increased or decreased in any substantial amount. And the next slide will illustrate that a little further. The middle line is our sales tax, the green bar. As you can see, sales tax has increased, essentially been flat the last 3 years with the addition of the TIF and the public safety sales tax in 2009. That's the increase that you see in sales taxes. And then finally, the franchise fees. As you can see, 2007-08 was our first telecom settlement with a cell phone provider. That's the large jump that you see from the 06-07 to the 07-08. In 08-09, we had another telecom settlement, not nearly as substantial as the last one, so that's the dip. And then 2009-10, we had our final telecom settlement, so that number will go down in our next fiscal year budget. This slide here I put together to give a perspective on what assessed valuation has done in the last 10 years and compare that to what the property tax revenue has done in the last 10 years. I know there's a lot of confusion surrounding the property tax, and that confusion lies solely with what's called the Hancock Amendment. Back in the 80s, the citizens of Missouri voted on what's now fairly common around the United States, but back in the 80s was fairly cutting edge, which is property tax reform, which says as values increase, revenues cannot increase. As values decrease, revenues cannot decrease. It essentially creates a smoothing effect, as you can see there, to your property tax. The caveat to that is new construction. So communities that have a lot of new construction, it's not counted as a negative to them. In other words, if Lee Summit adds a subdivision and it's another $1 million of assessed valuation, they don't have to roll their levy back for that $1 million. That would actually be new revenue. And if you think about it in terms of the levy is here to produce services, then if a new neighborhood came on, there'd be new streets to sweep, there'd be new streets to plow, there'd be new sewer lines to be laid, there'd be new, community development processes to take place. And so it stands to reason then with new services, then you need a new revenue stream. So the caveat to the Hancock Amendment that keeps revenue flat in the property tax is new construction. But as you can see, over the last 10 years, our levy has gone up, and over the last 3 or 4 years, it's gone down. But the property tax has been essentially flat. And again, the reason is if you were to put the Hancock Amendment in a math equation, you would have the assessed valuation as a constant, the revenue is a constant, and then you solve essentially for the levy. And that's why your levy can go up or down in any given fiscal year without really impacting your revenue. There's been some changes at the State House recently to put a few more tweaks on that so that there's not such a wide fluctuation in the levy each year. As those laws get fleshed out and become active, that's actually going to be a detriment to any city's ability to generate property tax revenue. So what you'll most likely see in the next 3 to 5 years, unless there is substantial new construction, is our property tax levies will go down. Because there's great talk at the State House now, I think primarily because people didn't understand Hancock to begin with, that when the assessed value goes down, the revenue should go down as well. There hasn't been that other discussion that when assessed values go up, the revenue should go back up. So if that is not fixed, then essentially what you'll see is revenues going down every year, regardless of whether the assessed value goes down or up. This next slide is focusing on sales taxes, and we currently have 5 sales taxes in the city. We have our general sales tax, which is 1%. We have the park sales tax, which is 1/8 of a percent. The transportation sales tax is 0.5 cent. The capital sales tax is 3/8 of a cent, and the public safety sales tax is 0.5 cent. If you do all that math, it's 2.25% to the city. Those sales taxes generated $6.7 million, including the new Walmart. And as you know, that there's a TIF on the new Walmart that's a little unusual for most TIFs. Instead of being a 50% TIF, it's a 100% TIF. So that next category is showing the reduction of the TIF for Project Area 1. So when you look at the sales taxes collected of $6.7 million and the revenues set aside for the repayment of the bonds of $1.4 million, the revenues available for the city for other purposes is $5.3 million. You compare that with last year's $4.9 million, and it's an actual increase of almost $300,000. But again, it's hard to compare apples to apples since the public safety sales tax began in earnest this fiscal year. Last fiscal year, it was merely 1 month. That's the difference of the $1,082,000 versus the $84,000 in the previous fiscal year. This next slide looks at expenditures by function, and again, the GASB doesn't look at things in a departmental basis like we do in the budget. They look at things by function. So the general government function would essentially be the administration department, the law department, economic development, finance, HR, the city clerk, anything that doesn't fall into one of these other categories. Public safety would then be police and EMS. Public Works is just Public Works. Community Development is the Department of Community Development, but then I'll explain here in a minute, those large fluctuations were attributable to the TIF. Parks and Rec, of course, is singular. Capital is for the entire city as a whole, as well as debt service. In community development, what you see in 2007-8, that large line, that was when the city was assisting the school district with their new buildings. And we spent essentially $14 million moving the Herndon Center, renovating the Aquila building, putting in their infrastructure, all the things that were tied to the 350 Highway TIF redevelopment agreement. And then in 2009-10, that other large bar in community development was the payment to Walmart per the TIF agreement. So this only goes back 3 years. The school district essentially received money in 06, 07, 07, 08, a little bit in 08, 09, but the bulk of it was 07, 08, and then Walmart received their money after opening in 09, 10. This next slide is highlighting just the general fund, the revenues by source. The property tax revenue, as you can see, actually went down by about $26,000. This isn't so much the property taxes that are tied to the levy as it is the amount of collections that came in. The collection percentage in a recession typically go down, and we saw that as well. Our collection percentages went down just slightly. The sales tax, including cigarette taxes, went down $312,000, and we showed that slide earlier. The franchise fees went down about $210,000. Again, this is a hard number to pin right now because the last 3 years have been very volatile with those one-time lump sum payments. Licensing and permitting went down about $6,300. Intergovernmental went up $34,000. That's an increase in the fuel tax distributed by the state as well as the licensing fee. Charges for services went down. This is probably our most dramatic. This has to do with EMS, and many things the State House does impacts us, and one thing that they did in their budget last year was they cut back on Medicaid, which is our #1 funding source for EMS. And that was a direct impact to our bottom line of about $300,000 in charges that we sent to the state that they simply did not pay because the money was no longer available. Fines and services for the first time in many years has gone up just slightly, $7,000. And then the big drop in miscellaneous is actually a good drop when you think of it in terms of employee safety. The $183,000 was primarily workers' comp reimbursements from our insurance provider. We had, I believe, 5 people out on workers' comp 2 years ago and just 2 people out last year in the general fund. So, we didn't get that revenue from the workers' comp insurance, but on the other hand, our employees were working and not off on injuries. All told, the revenue dropped about $941,000, with the 2 biggest being the sales tax dropping, due to the recession. The franchise fees, again, it was one-time money, so it wasn't a non-budgeted drop. And then the miscellaneous revenue, which we did account for in our budget. But all told, it was $941,000 reduction from the previous year. Looking then at the expenses, the general government, you see, went up about $142,000. This is primarily the addition of economic development as a unit that was added in the 2010 budget. In 2009, there were really no expenses to speak of for economic development. Community development went up about $129,000. This was moving the neighborhood services officers from Public Works to community development. As you can see, Public Works had a decline as well. Public safety went down about $120,000. This is primarily due to reductions in overtime in EMS as well as the police department. Excuse me, Public Works went down $196,000. $130,000 of that was the move to community development. The remainder of that was spending less on salt, which we attribute to purchasing, building, and maintaining the salt barn. We were able to buy salt at a cheaper price in the off-season to have it on hand when you need it, rather than paying it at a peak price when everybody's out there trying to buy salt. So the planning ahead saved the city roughly $40,000 to $50,000 in salt last year. And then capital outlay, there really was no capital outlay in 2010. That's actually was a rollover of the expenditures in 2009 when we had you all had set aside money to renovate the 911 booth. That was just a residual expenditure, but there was essentially no capital budgeted in 2010 due to the drop in the budget that we had created. But all told, the expenses went down $150,000 from the prior year. This next slide is a new one that we put together to show what our budget was versus our actual. So the budgeted revenue of $11.6 million and the actual revenue of $11.4. We were off about $254,000. Again, this was in EMS revenues declining at unfortunately a more rapid rate than we had originally anticipated. That's something we'll have to address in this year's budget. And the expenditures were originally budgeted at $12.6 million. We spent right at $12 million, about $627,000, excuse me, primarily due to unspent projects related to the economic development incentive program, the law department. Switching from a full-time person to the contract saved us some money, and not doing the downtown streetscape because we had all of the ERA grants that we were working on. So the final element of fund balance for the general fund, the revenues were 11.3, the expenditures were just over 12 million, so the city actually lost $622,000 in fund balance. However, if you recall, in the budget, we had actually planned on spending $900,000. So by our expenses being less than budget, even with the revenues being less than we anticipated, we still did a little better than what we originally estimated in our budget. And I've shown this slide before, but I just wanted to repeat part of the reason that we have such a drain on the tax resources is that those things that typically pay for themselves or have a larger percentage of the cost being covered by those who use the service. And EMS is one of the examples. Our revenue this year was only $712,000, but the expenses were $1.4 million. So that was a tax subsidy, if you will, of $717,000. meaning that somewhere else in the general fund we had to come up with $717,000 to cover the cost that the charges for services did not cover. And this slide here compares revenues and expenses for the last 5 years with fund balance. That red line is kind of a trailing enumeration of where fund balance has been. As you can see, back in 05 and 06, revenues exceeded expenditures. In 06, 07, expenditures exceeded revenues, so fund balance went down. In 07, 08, revenues again exceeded expenditures, so fund balance went up. 08, 09, again, fund balance went up. This year, expenses exceeded revenue, so fund balance slightly went down. And again, the 07, 08, 08, 09 revenues in excess of expenditures were really just those telecom settlements. When you pull those out, our revenues have essentially been flat for the last 4 years. And then just a quick look at the balance sheet. You can see our cash position has improved over last fiscal year. Part of that is you can see our receivables have gotten a little better. We're trying to implement new plans and processes to get our payments a little quicker. Our payments due from other funds have also gone down. Our prepaid expenses, that's our insurance. With NPR, we make our payment in July, so it essentially cuts our fiscal year in half. So we're always going to be paying half a year this year and half a year next year, just the way it works out. And then the liabilities, accounts payable, we've done a good job trying to get that down at the end of the fiscal year. The accrued payroll, again, it's all about timing. When we end our fiscal year, it's in the middle of a pay period, so we're always going to have accrued payroll. And deferred revenues, this was the settlement check from T-Mobile. It came in December, and under GAAP rules, anything that occurs within 60 days of the end of your fiscal year, you have to add it to your current year business. So even though we got the check in December, we have to show it as a liability and a revenue, so it offsets in the current fiscal year. And then I just want to take a moment to break out fund balance. Fund balance, again, is any excess revenues over expenditures for the life of the city, basically. Again, our prepaid expenses are the insurances. The inventories, of course, are office supplies. The bulk of our inventories are in the vehicle maintenance department, having parts on hand to repair vehicles. The 17% reserve the city's had in place for quite some time. And it's a good plan to set aside some portion of your current revenue in the event that you have a large dip in your revenue due to some kind of catastrophic event. Having the reserve tied to revenues rather than expenditures, though, lends it to high volatility based on when revenues such as, the telecom settlements are anomalies. They drive it up in a fiscal year, and then when you don't have that, then it comes back down. And what you can see is last year the 17% reserve was $2.2 million. This year it's $1.8 million, and that's because the revenue went down. I think it would be wise for the board to either add another month, go to 25%, or to move that from revenue to expenditures to try and normalize that account to keep it more stable and take some of the volatility out of that reserve. And then the unreserved, undesignated, these are the these are the funds that are available for other projects right now. It was $3.9 million last year. Due to the reduction in fund balance, it's $3.8 this year. And just a reminder that when we passed the budget, one of the first things that was done was taking part of that $3.8 million, setting it aside for economic development projects. So even though in the audit it shows $3.8 million, $1.45 million of that's already been spent on economic development. Or not necessarily spent, but designated for economic development. This slide here just quickly looks at all the special revenue funds. It's in your packet. If you have any questions, feel free to ask me. I'm not going to go into a lot of great detail here, but you can see the park fund made $10,000. The grant fund, it's more of a matter of timing. We spent about $47,000 more than we brought in that fiscal year. Transportation, we spent about $27,000 more than we brought in. The capital sales tax, we spent $105,000 more than we brought in. That was our new finance system. That was a planned fund balance expenditure. Risk management's essentially flat. The public safety sales tax is an area where we've talked about it before, but the expenditures for the staff, day one when you start a new tax, you won't have new employees. And so that $500,000 roughly is the unspent salary money from the positions not being filled in November, December, January. Some of those positions took half a year or more before you had a qualified applicant that you could slide into that slot. So staff will be working with the police department to see what public safety related projects that money could be spent on without adding to the fixed cost. Because as you'll see going forward, when the salaries are completely full, we're going to put our expenditures right up there against our revenue. The CIP fund, the $1.3 million was essentially the money from Jackson County out of our KERS account. The expenditures, the $2.4 million, was essentially the 63rd Street Bridge. Again, another planned fund balance expenditure, but we used $1.2 million of fund balance to fund that bridge. And then finally, the TIF fund is another one of those highly volatile funds. The inside the TIF fund is not only the debt, but also the capital projects. And so that $5 million Walmart payment was out of bond money. Bonds aren't called revenues, they're called fund balance. So it makes it appear as if we spent $4.6 million more than we brought in. Technically, we did under GAAP rules, but really it was a planned bond expenditure, and that money was just sitting in fund balance waiting for all the projects to be completed. Moving on to a brief summary of capital projects. In 2009, as I mentioned earlier, we built the 63rd Street Bridge. We had $1.2 million from Jackson County KERS and a little over $1 million from our fund balance in the CIP fund. A note, our CIP fund now has $210,000 of fund balance with no revenue stream dedicated to it. The only way we're really going to have money in earnest to continue the good work that's been done the last 3 or 4 years in terms of capital projects around the city is to come up with a dedicated funding source. The one funding source we currently have, once the Aldi is finished and the CID begins paying back the $650,000 loan, those payments are going into the CIP fund. So there won't be a lot next year, but in 2 or 3 years there'll be enough money to hopefully have another project. But long term, the city is going to have to look at some kind of dedicated funding source, whether that's a portion of a sales tax or a portion of the levy or some sort of dedicated funding source to maintain our desperate need for capital projects, mostly related to stormwater, because we already have a transportation tax dedicated to roads, but stormwater is the one area of the city that we really don't have a dedicated funding source for currently. And a quick debt summary, the city currently has 2 types of debt. Our largest debt is tied to the TIF project on 350 Highway that we've spoken about before. And then we have 3 other debts, all related to the sewer fund for sanitary sewer infrastructure improvements. The 350 Highway debt payment, we've talked about this before, but I just wanted to show an illustration of what is going to transpire this fiscal year and what's headed on the horizon. There's 2 debt payments made a year, June 1st and December 1st. So the December 1st, 2010 payment has already been made in this current fiscal year. There was plenty of funds in the account to make that payment. The June 1st payment, we are projecting right now that at May 31st we'll have plenty of funds to make that payment as well. However, next fiscal year, the first payment due is December 1st, which is 1 month after our fiscal year, and the property taxes won't be in the account yet because they're not due until December 31st. We don't usually get those from Jackson County till late January or early February, depending on when they're paid. So that debt payment of $1.7 million, which as you can see is higher than the June payment, is actually our first principal payment on these bonds. And we're currently projecting that balance based on the sales tax projections that we have to date, and knowing that we won't have that property tax payment at $1.6 million. So we're currently projecting a $73,000 deficit. Now, just to be clear, the fund will have that money just not at the time it's owed. So the city essentially will be loaning the TIF, based on my current calculation, $73,000. Now, if sales pick up, that could wipe away. If sales start to fall off more than they currently have, that could get larger. But the debt payment owed on December 1st is $1.7 million. Whatever's not in the account, the city has to cover. When the property tax payment is paid, then we will get paid back whatever amount we have to essentially loan the TIF if that's necessary. But again, I just wanted to bring this to your to the forefront so that you can see it, everybody can understand it. The next slide I created is essentially a recap of the actual debt on this project. In 2008, it was only it was a little less than 8 months of actual debt interest owed, so that's why it's not $2 million. It's a little less than that. 2009, 10, and 11 were all interest-only payments, and 2012 is when we start our first principal payment. As you can see, that increase is a 36% increase. The payment then essentially teeters around that 3 to 2% increase each year. There's little bubbles in there just based on the way amortization tables lie out until you get to 2030. But keep in mind, a 2% increase is, tens of thousands of dollars each year. So as I showed in the last slide, if we're only projecting $1.6 million in November, if this scenario doesn't improve, if the sales don't pick up, if more buildings aren't built around there that can help impact that, when you hit 2018 and it's a $3 million payment, the city would be liable for anything that the TIF does not cover. So again, I don't want to sound like an alarmist, but just a realist. What we're projecting right now with what we know right now is that we'll have to loan the TIF about $73,000 in December. It'll be a part of our budget that we put together, but it will truly be a loan because we'll get that money back in either January or February when the property taxes are paid. But that will most likely be an annual event, just being real, because the debt payment's in December, but the property taxes aren't paid until January. The last fund to look at is the sewer fund. The revenue of the sewer fund is $5.448 million. Last year it was $5.431, so it just slightly went up. Excuse me, the expenditures went down primarily due to those emergency sewer repairs that we had in the last fiscal year. Thankfully, we didn't have or 2 years ago, excuse me. Thankfully, we did not have those last year, which lowered some of our costs. The excess in revenues over expenditures is just over $400,000, and the fund balance continues to grow. And I put this slide together so you could see the revenues have exceeded expenditures every year for quite some time, and rightfully so. I know this kind of looks alarming that fund balance keeps growing, but as you look at this next slide, again, there's debt tied. There's debt tied to the sewer fund, and in 2015, that debt jumps to $1 million. This year, it was $846,000. So I think the intention back in 2007, and in my opinion, it was a good one, was to have incremental increases in the sewer rate every year, so that you didn't have these large fluctuations in any one given fiscal year. But what you'll see is, this year we're probably looking at another 2.5% to 3% increase based on Little Blue Valley and Kansas City's increases in treatment cost. But the debt, we're really not raising the rate anymore. The fund balance that we currently have, we're using to smooth out the debt payment going forward. And the last thing I wanted to briefly touch on was the pension. The pensions highlighted in the audit. The city has 3 types of pension plans right now. We have our active civilian plan, which is called Loggers. It's ran through the state of Missouri. We have an active police officer plan that is run by the Police Pension Board. And then we have 2 inactive police officer plans, which essentially means that sometime in the past, the city froze a pension plan. The way that works is you have to set up enough assets to cover whatever your liability is, so that going forward, the money that's needed to pay the pension benefit is already set up in an annuity, and it doesn't have any further fiscal impact on the city. So our loggers plan currently pays 1.25 times the years of service times the average salary for the 5 highest salaries earned in the last 10 years. It's a fairly standard plan, and the loggers, because they do all the calculations, will send us an invoice based on the payroll data that we submit to them. In the fiscal year that was just audited, we paid 11.4% of our payroll, or $510,000 to loggers for the pension cost. One of the things I'll add about loggers is the state has set this up to make it a very attractive plan for governments, and that's why you see a lot of governments in it. Loggers cannot increase more than 1% on their actuarial basis each fiscal year, which then limits the volatility of how much money the government's paying any given fiscal year. However, it creates a large unfunded gap that you'll see in the audit. But the way loggers works is they take your debt and they smooth it out over 25 years. So essentially, loggers will go up every year without a question because you're always trying to cover that gap. But 20 years from now, that unfunded liability will be considerably less than it is now as it gets smoothed out over time. And this is what's happened with loggers over the last 10 years. In 2000, the city paid $392,000 to loggers. You can see it's gone up slightly. Part of these percentage increase are additions to staff, staff being taken out of the plan, overtime is a factor. So all those things will have a fluctuation on how much is actually required to contribute. But the key is that the city does contribute the actuarial required contribution, which by law is all you're required to contribute. So there is an unfunded liability, and currently I think we're about 47% funded in this plan. Moving on then, the defined benefit police pension trust plan pays 2.5 times the years of service for the first 20 years, an additional 1% for any year of service after the 20 for a maximum of 10. So if you're here 30 years, it's a 60% benefit. If you stay beyond the 30 years and you're over 55, there's what's called a late retirement adjustment for anybody who stays and works later. That's an actuarial calculation that's added onto the additional benefit that's already been accrued. And in the last fiscal year, the city paid $614,000, or 19.44% of the payroll. And over the last 10 years, you can see the plan back in 2000 was $110,000 a year, and it has climbed each year to where now, in the last fiscal year, is almost $15,000. And those are all the slides I have and comments I have. I'd be happy to answer any questions you may have.
Okay, we've got questions of Mr. Wilmoth. I'm going to start on my left. First one I see up is Mr. Ertz.
Yes, on the pension summary page where you said there's 3 funds, you said there's 2 inactive police officers that are fully funded with an annuity. Will that annuity end soon, and is there a significant amount of money in there, or does it all get absorbed into the payouts of the annuity?
Essentially, the annuity has been earning better interest than the liability. So the last 3 years, we've actually gotten checks from the annuity that we then just hand over to the defined benefit plan. But the way it works is until the last person who's got a vested interest in that plan is no longer in the plan, meaning they've expired, there's always going to be an asset equal to the liability. In the event that the assets exceed the liabilities, then they write us a check for that difference. But we know what the cost is, and it'll never change. It could go down, but it'll never go up because it's a frozen plan. So whatever we owed people at the time that plan was frozen, that's the cost, and it never changes unless it goes down, again, based on people no longer being in the plan.
My other question was, it was a little unclear. I heard you say when it comes to civilian employees, on the police employees pension plan, is that also leveled out over a 25-year period so that the payment's going in, or?
It's a little different. The actuary of the police pension plan has it on a fixed 30-year. So essentially they look at the debt and they take whatever the debt is and amortize that over 30 years and then have you make that payment. Then next year they'll look at it again, take off a year over 29 years. So in theory, at the end of that 30 years, there would be no debt. The only downfall that I see to that personally is while it may be a $300,000 or $400,000 payment in year 30, it's a $3 or $4 million payment in year 1 or 2. There's no way the city could afford that. So we're actually working with the actuary right now, looking at different options that may help the long-term funding of that plan.
And some of your suggestions in here, I imagine you'll bring up at the finance meeting.
Yes.
Thank you.
Go back to Mr. Lightfoot, please.
Just one question on the pension as well. On the laggers pension, you said that was like 46% funded?
46 or 47, yes.
And then what about the police pension? What do you know the percentage of that?
I believe it's right around 56 or 57.
Okay. Thanks.
Yep.
Okay. Mr. Kramer.
On those the two pension funds that are frozen, you mentioned that they're in annuities, and I'm not a financial guru. I always lean to people that have these answers. Is there, when the last person expires and there's a fund balance remaining, should we transfer that fund or they write us a check and we put it to a different fund? Is there a penalty for going from one fund to the other, or how does that work?
No, essentially the annuities are set up to be just that. Whatever the annual debt is, the assets are supposed to be enough to cover it. In the event that you have excess assets in any given fiscal year, the plan immediately writes a check to the city. It's been our policy, because we are underfunded in the police plan, to just send that money directly to the police plan to help cover some of those shortfalls.
Okay, thank you.
And so at the end of the annuity, whenever that may be, whatever excess assets may be there, I believe that would be the plan as well.
Okay.
Ms. Melson.
It says here that the city contributed the $614,000 or 19.44% of the payroll. Are the police required to put a percentage into that fund also?
No. I believe that stopped sometime in either the late 80s or the early 90s. I don't have the records to go back that far, but the plan document was amended. The employees contributed up to that point, but then there was a plan amendment that took that provision away.
So the police employees do not have to contribute to their police pension fund?
Correct. They don't, and neither do the civilians and loggers.
And so basically then the city is contributing all the money to that fund?
Correct.
And so there is no requirement that the police employees put any money towards their own pensions?
It's not currently in the plan, no.
Okay. All right, thank you.
Mr. Hamilton.
In reference to the EMS deficit, I know in past years I've asked questions about this, and part of the answer has been that Medicaid, Medicare payments come in late, and later. So does this deficit that you're showing, is this a new deficit, or is this something that has been occurring for the past few years as these Medicaid, Medicare payments come in late, or are they not even getting here? I'm just...
It's a component of both, actually. The Medicare and Medicaid are both habitually late payers. They essentially, I think the earliest I've ever seen is 6 months, but it's typically 9 months to a year after the charges have been incurred that you receive your payment from them. However, they also have caps, and the state of Missouri lowered that cap in an effort to, shore up their budget shortfall in the last fiscal year. So once they hit that cap, whatever it is, whenever it is, they're done making payments, and those charges are written off as bad debt.
So then we are likely to continue to be in the hole in this region.
Yes, I think essentially if you want to liken it to a hospital, Truman Medical Center might be the best one, because the majority of our payer mix is Medicare, Medicaid. The majority of their payer mix is as well. And those charges happen regardless of who pays it. The bottom line is to accept their payment, you're essentially saying you won't go after the person. So essentially we have to write off the difference. So the hope is that, the state will increase the Medicare, Medicaid funding, allow more money into that pool, at which time we could get reimbursed, but it won't be for any charges that have currently been denied. It'll simply be going forward.
Or we could reduce expenditures.
We could do that as well, yeah.
Thank you.
Ms. Melson again.
I do have another question. Going back to that you said that the police employees didn't have to pay anything into the pension fund. In order, if the city was not able to contribute consistently into that fund in the amount that they have in the past, in order to change that, would that have to come from the police pension fund board as a change to that policy?
I don't want to put Mr. Willerth on the spot. That's a little outside my realm, but I do know just from my time with pension plans that any change to the document can't impact current
all
members.
The current people that are currently in
Right. Essentially what we would have to do is create a third frozen plan, create a new plan, at which point
gotcha.
Mandatory contribution is required.
Is that a possibility, and this may be out of your own too, is that to have a presentation by the police pension fund board?
I know that
on their background and kind of status?
In the last 3 to 4 months, we've been meeting with the pension board about this issue.
Okay.
They're currently working on some possible scenarios that they want to, bring forward to help address the issue moving forward. So I think we should probably hold off on that presentation until we have some of the findings, some of the analysis that we're currently working on fully vetted.
And do we know how many people are in this fund?
You mean being paid,
fund?
or how many people have a vested interest in it?
Would have a vested interest, I suppose.
There's currently 9 people that receive payments. There's 45 people that have a vested interest.
Okay.
Meaning that they've accrued benefit into the plan.
Okay, thank you.
Mr. Van Buskirk.
Well, how many people then have a vested interest in the loggers fund, pension fund?
I actually don't have that off the top of my head. I'm sorry.
Do you have an approximate?
I really don't. The difference between loggers and the police pension plan is, it's our plan, so we have the actuary, we have all the documents. When you deal with loggers, it's all plan-wide, not city-specific. So I can get that information from loggers, but I don't have it.
It would be a considerably larger number than participants in the police plan, probably, would it not?
I would say so, because the police is only sworn officers, so you're dealing with a subset of the entire employee pool. And I believe that the city's been in loggers longer, so it would stand to reason that more people would be retired in that plan.
Okay, thank you. One other question. Back under expenditure highlights, general fund, in capital outlay.
Page 4.
Is it page 4? You have an amount there of $2,069. In our packet, the amount was, well, wait a minute. Oh, that is 52. There's my angle. Yeah. I'm sorry. Okay. We're good. It looked like a dollar sign of the 5.
Oh, okay. Sorry.
I don't have a question about that then.
Very
good. Getting back to the pension funding. So what you're saying, if with this 47% funded for the loggers fund, is nothing really that we should not be alarmed about at this point in time. Is that correct?
No. Loggers is a considerably larger plan, because they've got governments all over Missouri in it, and they have billions of dollars in assets. And so, when we hit the recession, there was a considerable drop, but as the economy rebounds, they're going to rebound faster, if you will, than our current pension plan, simply because they have more assets to invest. Again, the thing about pension is whatever the actuary says, this is what you owe. The way they come up with that is what you physically owe to the people who are currently drawing benefit from the plan, plus an actuarial decision of what the benefit for people who are currently in the plan will be owed when they retire. Those two things combined become what you're supposed to pay every year. As long as you pay that amount, you have no problems with your pension funding.
Okay.
I
remember,
concerned.
I think a year ago, it was in excess of 70% funded, I believe, at that time. So, okay, thank you.
Ms. Melson.
I have one quick question, hopefully. Can a police employee be a part of the loggers and the police pension fund?
No, the police pension plan is only for sworn officers.
Okay, so it's
those
only
people that have taken the oath as
right. Okay, and then but the police employees.
Anyone that's not sworn is in loggers.
Okay, that's what I need to know. Thank you.
Mr. Ertz.
Are there any forfeitures for people that leave the retirement before their? Is there a time period on being vested in this?
Yes, I think the vesting period for police is 10 years. 10 years. I've got my old Jackson County hat on, but it's 10 years. So anyone who has accrued a benefit but doesn't stay here 10 years, they don't come back within 2 to reclaim that benefit, then that essentially becomes excess assets to help cover the deficit.
So that's already in the numbers.
Right.
Thank you.
Mr. Kramer.
About that police pension fund, say somebody's terminated, are they able to take that vesting with them, or how does that work?
No, the way it works is, assuming you're here 10 years and then you leave for whatever reason, that money just sits there until you're 55 for police officers. At the age of 55, they then have the ability to draw that money whether they work here or not as their pension benefit. But it's not, because it's not a contributory plan, meaning you don't put any of your own money in, then there's nothing to draw out of the plan. There's simply a benefit, if you've accrued it, that's available to you at the time you retire.
But say somebody's terminated, do they lose that benefit in a situation like that, or how does that work?
If they've accrued it, they don't lose it. So
lose
if they've been here 10 years, they don't lose it. If they've been here 8 years and they don't come back 2 years later, then they lose it.
I understand. Thank you.
Very good. A lot to absorb. Mr. Van Buskirk, anything else?
Sorry.
Okay.
No.
Okay. A lot to absorb there. Anything else to add, Mr. Wilmuth? Excuse me.